All right, good morning, everybody. Well, today we're going to be speaking about working with first-time buyers. So in the first part of today, I've asked Ritu from CalCoast Financial to discuss some of the down payment assistance program. Now, first-time buyers right now is plentiful. There's always plentiful. There's always going to be new first-time buyers, right? And technically, a first-time buyer is someone who has not owned any real estate for 2 or 3 years. So Ritu will clarify that because, again, just because you own a house 10 years ago, you sold it, and you've been renting, you can technically become a first-time buyer again, right? So you can always start fresh. So Ritu will clarify that. The other thing is, again, usually the number one reason why buyers are not, or people can't buy a house is usually a down payment, okay? Because usually people they've lived paycheck to paycheck, so they're unable to save, which is not a good thing, right? Because when you buy a house, there's always going to be inherent things that's going to happen, things that the house is going to need to update. So one thing that I usually work with my first-time buyers is to figure out their budget, okay? And some of these programs do require a buyer or home buyer to go into some classes, which talks about, not only the importance of home ownership, but what is involved, right? Such as budgeting, right? Thinking of what are those potential upgrades, updates, improvements, that needs to happen, okay? Maintenance issues. Because if a buyer is to, to basically put in all their money into a house and the roof leaks or the fence goes down or, the kitchen, sets on fire, right? We have house insurance, but there's a deductible, right? So some people, the deductible is an issue. So which means that, the insurance may not pay out sometimes until you have the deductible, right? So some people don't have the deductible, so they basically have what we call a naked insurance. The same thing with a car. If your car insurance has a $1,000 deductible, but you don't have the $1,000 to pay that deductible, you may not have any insurance, right? So again, there are ways around it. Just understand this. When we're working with first-time home buyers, the counseling is truly very important because I've had buyers where I said, hey, I don't think you're ready. I don't know if I want to, let's talk about a couple things first, right? And see if you're truly ready, okay? Just like in 2003, 4, 5, 6, 7, right? Before the big mortgage meltdown, there was a lot of people who were buying real estate who had no business owning real estate. Some of them got out at the right time, but most got out too late, right? There were many buyers who I met and I said, hey, do you understand negative amortization? Do you understand, adjustable rate mortgages, right? Do you understand, the expenses that may happen? It's like I said before, the the consultation with a first-time home buyer is truly very important because there were many people who I said, hey, I can't help you. I don't think you're ready. If you want to have someone else help you, go right ahead. And they bought from another agent, and a year or two later, they're calling me because we need to do a short sale, right? Or they want to avoid foreclosure. See, I've never had someone lose a house in over 34 years, right? No one has ever called me, Greg, I'm losing my house. I lost my job. I'm losing my house. Because one of the things I always say, hey, how secure are you in your job? If you lose your job in 3 or 6 months, how are you going to be, right? As you know, here in the Bay Area, there's layoffs happening, right? Every day, right? From the high tech to regular, right? People, just remember, one deal, right, can become multiple deals if they're happy, right? If they're unhappy, that could lose you a couple more referrals, possibly, right? Just understand this, especially with with all these Instagram and social media. People will post stuff about you. Hopefully, they're good stuff, right? So we got to make sure that we deliver great service, not just one deal, right? All of us are in real estate for the long term. Okay, so make sure that you are giving the proper advice and consult with your clients regarding these programs. Okay, so first-time buyers, right? Where do we find them? They're everywhere, right? Just like where to find sellers, they're everywhere. We just have to meet enough people every single day. So what I'm going to do now is turn the conversation to Ritu and to discuss some of those down payment assistance programs. Okay, so Ritu.
Thank you, Greg. And thank you for having me and go over the first-time homebuyer programs. We are a broker at CalCoast, which means that a little background on what it means. We have multiple lenders we work with. As such, there are multiple options and programs available for buyers, from standard 20% down to excellent rates, 25, 30% down to zero down programs options. So today, my presentation is mostly going to focus on the Santa Clara County program Empower, which is ongoing and gives about 30% in down payment assistance to first-time home buyer. It is for the Santa Clara County, so all areas that are covered under Santa Clara County, buyer can buy the property in that area. They have some major changes coming, but there's no as such set dates for those, but I'll touch on those once we complete the presentation. So any questions here, or I can move to the next slide? All right, so the next slide that I have is regarding down payment assistance that Santa Clara County offers. There are two programs they offer. The most popular one is the Empower program, which is a 30% down payment program. The HELP program is also first-time homebuyer, but it only does 10% assistance. And these programs are offered to buyers who are living or working in Santa Clara County and plan to buy in Santa Clara County. The property has to be in Santa Clara County. The reason being this program is funded by 2016 Measure A. That's a affordable housing bond. And that is what is used to finance these programs for the first-time home buyer. It's administered by Housing Trust, but it is overlooked, or the oversight is by the Santa Clara County itself. One of the common questions I get regarding this program is that what if the buyer buys it as a first-time home buyer and later on rents it out in a year, 2 year? County is very particular about home ownership. It has to be a first-time home buyer. They do the vetting and they do monitor these loans to make sure these properties are not rented out. And anytime they're rented out, they will come back asking persons to either sell or refinance. Refinance is the first option, to refinance it out of this program or to sell the property if they are not able to refinance it. They will not allow it to be rented. They're very strict about it and they do monitor it. Any questions here?
Ritu, I have a question.
Yes, go ahead.
Is it only for Santa Clara County and no other nearby counties?
This is the Santa Clara County program, and it's funded by Bond A and the Measure A, I'm sorry. So Alameda County has their own. Alameda County has a different one because it's a little different in the sense that they open windows for that financing a few times a year. This one is ongoing. So if you have buyers looking to buy and are not ready, this is a better program if they're looking for purchase in Santa Clara. But then the Alameda County AC Boost program is also there for people looking to buy in Alameda County and live or work there. And again, if you have buyers, it's better to have them connect with me so that we can have a one-on-one meeting or Zoom call regarding whether they will qualify or not for these programs. And then you can take it from there. There are other programs which are not county specific, like CalHEFA with the zero down. And I can touch a little bit about it at the end of the program, at the end of the training, if there is time. So that way, you have a little insight of different programs available. But this one is huge for people looking to buy in Santa Clara County and our low income groups.
Okay, thank you, Ritu.
Hi, Rito. I've got one question. You had mentioned for first-time homebuyers that live or work. Is it live or work or live and work in Santa Clara?
And we'll go over more details in the following slides. Yes.
Okay, great. Thank you.
Sure. So this down payment assistance program, again, as I mentioned, is a Measure A 2016 bond that finances this program. And that's why it's specific to this county. This program provides up to 30% of the down payment assistance, the purchase price. They don't have a maximum purchase price, but they have a maximum loan amount, either 30% or 250,000, whatever is lower. That's the maximum loan amount that is provided to the first-time home buyer. First-time home buyer, again, for the county is anyone who hasn't owned a primary home for the last 3 years. They will allow them to qualify for this program. This is a 30-year program, and it's, again, the subject property has to be located within the county itself, cannot be outside. It is a deferred loan. So there is a first mortgage that we do that will go behind, in front of this program. This is behind that first mortgage. The first mortgage will be for up to, I believe, 67%. And then the loan, this one, a second mortgage, is going to provide a down payment assistance up to 30% of that. And 3% will be borrower's own share. We'll talk about that more in the next slide. But on this slide, let's talk about the deferred loan with a share of appreciation. That's the type of loan. What that means is that this second loan will have no payment. It has no interest and no payment. So till the borrower does not sell the property or refi, they do not have to make a single payment on this down payment assistance. However, it has a share of appreciation of equity, which means whenever they refinance, sell the property, the appreciation, this share will be equivalent to the down payment assistance they received. If they received 30% or 20%, that portion, along with the loan amount, is due to the county. So the loan is not forgivable. And that is very important to remember, that this is not a grant, this is a loan. People's, most of the questions I get is that when will this be forgiven? And this is not a forgivable grant. This is a loan that the county gives, and it's a down payment assistance loan. It will be due when a cash out refi or a sale of the property happens. And a share of the equity equivalent to the down payment assistance will also be due at that time. So no maximum purchase price for the subject property. The county's allowed a maximum whatever the borrower can afford. The loan can, however, not go over 30% or 250,000, whichever is the lesser of the two. The funds of this loan can only be used towards down payment, not towards closing cost. That's another common question that is received, that can the borrower split the funds between down payment and closing costs? Borrower has to bring their own closing cost, or they can be lender credits towards it, but there's no part of this loan can be used towards closing costs. Any questions on this slide?
Ritu, again, one question. So, if the property is sold, right, then they have to return this down payment amount. Will there be an interest on this one?
So there's no interest, only equity share.
Okay, all right.
Yeah. So,
Ritu, I have a question. Hello, Ritu, I have a question.
yeah, sure.
Yeah. I have a friend, they want to buy a $1.5 million house, and they almost can loan for $1.1 million. So they can be this assistance program.
So let's go over the requirements, and we can that way go over the general requirements that are needed, because they have to be qualified as a low income or to be able to qualify. Do they live or work in the county will be first of the questions to qualify for this loan. So going to the second slide, it talks about repayment options first, and then about the borrower requirements. So we'll go over the repayment, and then we'll go more into the requirements for the borrowers to qualify for this program, Cindy. And so the repayment options, like I mentioned in the previous slide, is going to happen when there is a sale or a cash out refinance, or if the borrower is unable to meet the terms of the loan, or at the 30-year term of the loan. So those are the 4 times when the repayment happens. Repayment is no interest due. However, the total loan amount that was given, the down payment assistance, let's say 250,000 was the down payment assistance, that's due, and share of equity. So if that was 20% of the property, the down payment assistance at the time of purchase, it was 20%, then 20% of depreciation. Let's say they bought the property for $1 million and the property is now 1.5. That 500,000 appreciation, 20% of that will be due to the county at the time of repayment. So both of these are requirements of this loan. The reason why people say, most people ask why the county is getting this share from the equity appreciation. And one of the things to remember is this is taxpayer money, bond money that's being assigned to help people buy a home. As such, county is very responsible regarding earning something in return to show to the legislatures and the taxpayers for the funds that we use, as well as to make sure that they are used for the right reasons. People who need the and qualify are the only ones getting these loans. And how do they qualify those buyers? It has to be a first-time home buyer who hasn't owned a home in Santa Clara County. In last 3 years, and has a look at, and is looking to buy the primary home in Santa Clara County. So no primary home ownership and looking to buy in Santa Clara County. I recently had a buyer who owned a home in Las Vegas about 4 years ago, lived over there for a year and moved over to Santa Clara County for work. So he is a first-time home buyer, even though he has that rental property in Vegas, because he's not lived in it as a primary residence for last 3 years. So people who are looking to buy in Santa Clara County and do not have a primary home for the last 3 years qualify for this. Live or work in Santa Clara County, like I mentioned before, and they have to have at least 3% of their own funds towards down payment. 3% of own funds can be 1.5 of their own checking, savings, stock accounts, and 1.5 can be gift monies from immediate family. But it cannot be all gift monies in this program. It has to be 1.5 of their own funds that is needed, plus the closing cost. The gross income, and again, this is very important to remember, is that the annual gross household income cannot be more than 120% of the median income in Santa Clara County. And this means that anyone, no matter whether they are on the loan or not, and county pre-screens to make sure who is, living with them at that address, there are ways of finding that out. And county does the due diligence. So let's say the husband's on the loan, the wife's working also, but not on loan. So combined income cannot be more than 120%. And that is whether she's on the loan or not, it applies to the income calculation for the county. If there is elderly parents receiving Social Security, or if there is teenager working part-time at a coffee shop, all those incomes are combined, whether they are on the loan or not, to qualify for this program. So one of the questions that comes up is the 120% as of, and again, these median incomes for the county changes every year. As of now, the median income for one person household is $154,800. So that's one. So it's slightly less than 155 for one person household, and it's different for different household sizes. And that's the reason why this program or this training is more to give you an insight on the program, but not for you to qualify the borrowers. That's something that we as lenders do to make sure they qualify for the program and that they meet the basic guidelines for us to then have them do the pre-screening with the county to get a pre-approval then completed. So any questions on the borrower requirements before I go over the property requirements? No, okay.
So I have a question, sorry. So this assistance is just for the down payment, right?
Right.
Okay, thank you.
Yeah. So the property requirements are that it has to be a single family home, a condominium, or a townhome. It has to be owner occupied. The seller is either living over there or it has to be vacant if it was tenant occupied, which means the tenant has vacated this property at least 6 months Not it cannot be like currently tenant owned or tenant occupied, or it cannot be a few months before. It has to be vacant for 6 months or owner occupied property that's being sold. So that's one of the big requirements about the property that the buyer can purchase. New builder built is also allowed. So because it's will be considered as a vacant property with no ownership in the last 6 months. So that's important to remember, that the property that you show these buyers once they're approved has to be either owner occupied or vacant for 6 months for the program to be applied towards that purchase. Any questions here? Okay. And I believe that's about all on this Empower program. The second program that I talked about in the beginning is the HELP program that the county offers. It's a little more lenient in regards to the household income. That's about 140%. So close to 165,000 of the for a 1-person household in the county. Again, it's the same way. It works in a similar way, that the principal and equity share will be due when the prepayment is made. And again, the share is the same amount as the loan amount down payment assistance received for HELP. The maximum loan amount under HELP is only 10% or 80,000 max. So this is a little more stricter or a little more conservative when it comes to down payment assistance, because the other program that goes up to 30% or 250,000. This one is 10% or 80,000, whichever is less. This program does allow cities in East Palo Alto and Menlo Park, besides Santa Clara County, to be part of the program. So if you have buyers who can qualify for the program, then they can look in cities like East Palo Alto and Menlo Park for this program. It's similar to the other program, the Empower program, where the loan type is a deferred loan with 0 interest, no payment to be made while they're living in that property and have it as owner occupied. The maximum purchase price, unlike the Empower program, is set in this program, and it's 800,000 max. So borrowers looking up to 800,000 who can qualify for this program can get up to 80,000 or 10% of the purchase price in HELP program down payment assistance. Any questions here?
Yes, I have one, Ritu.
Yes.
Yes, so this can also be for condos and townhomes as well?
So all these programs allow for condos, townhomes, and single-family homes. All 3 types of properties are allowed under both these programs.
Awesome.
Yeah. Anything else that I can answer?
Maria had a question on the chat. Basically, is there a limit on what you can sell it for, like a BMR property?
No, this is not for BMR properties. This is just standard homeowner occupancy. So they do not control the sale price, unlike the BMR properties.
Yeah, so they can just sell at the market price, right?
Yes, and the property is also not a BMR when they buy it. That's important to remember. They do not allow this loan on BMR properties.
Okay, got it. Thank you so much.
Yeah.
And one question, Ritu. So it shows like, the share of appreciation. So if in case in future seller wants to sell this property, so do, the appreciation goes to the bank?
No, it's to the county. Only the share of appreciation is part of this down payment assistance. And the down payment assistance is from the county.
And what do you feel like, which assistant program works best for, like, if someone wants to buy something, does that help, like, means how we can guide the client in way, like, this maybe works best for you, instead of like, because appreciation after some time, it's their money, right? But they have to get that share with the county, right?
Right. So one thing to remember is this is down payment assistance for first-time home buyers, for those who do not qualify. Or I'm sorry, for those who do not have funds to make that down payment assistance. It's not for buyers who have the money and just want to use free funds.
Okay.
So you are talking to buyers who say, okay, I have this 10,000 or 15,000 or 25,000 in my account, but I'm paying this 3,000 in rent and I have it, my family is growing. Those are the buyers you can say, hey, I have my lender with these programs. I'm not here to qualify you because I'm not the loan officer, but my lender can see based on your income, household income, as well as the areas where you want to buy, which programs can you get approved for. There are programs under County, Santa Clara, like I said, Empower and Help. There are programs under Alameda County, which is called AC Boost. There are programs that can apply to any county in California under CalHFA. There are FHA loans also with 3.5% down and a CalHFA FHA loan. So there are multiple loans and options available for first-time home buyer. And that's part of the pre-screening and pre-approval that we as a lender will do.
So basically, when you meet clients, not necessarily just first-time buyers, it could be a move-up seller, right, who wants to buy another property. It's always best to refer the financing questions to your loan officer. We know enough to tell them, hey, this is available, right? But let's see if you can qualify and which program is best for you. Let me have my loan officer, like Ritu, who's knowledgeable, to explain to you your financing options. That's one of the dialogue I always teach you guys is use the word, let's see what your financing options are. Because I know you're pre-approved with Chase, but let's see if there's something else better out there. Let me have my loan officer, my favorite loan officer, call you, right? That's what you want, is to give them financing options, right? Even though they already have a program. Now, if they have a great program that sounds good, it doesn't hurt to shop it around or to see what other programs that might be out there. Remember, this is a down payment assistance. Why do you want down payment assistance? Well, number one, maybe you can't qualify based on your income, right? As Ritu mentioned, you can either go 140% or 120% of the area median income. And that depends on the area, right? Depends on how big or how small the family or the household is. Kids are included in there, right? So it depends on how many kids they might have, right? So again, there's different qualifications that we do not need to know. It's good to know, right? Yet go to the expert, right? In this case, it's Ritu, right? Who knows the program inside and out. That's what you want. You want an affiliate that knows the program itself, okay? So again, as you guys are marketing this program, it's basically thinking of buying your home, need some assistance with the down payment, call me for further details. Get the calls, refer to Ritu and see what she can do. She'll get back to you and say, hey, these are the things that do a Zoom call, do a conference call, right? Zoom calls are so easy now. Ritu's very good at it. She'll do Zoom calls with your client, right? Send you the Zoom links and go with that, right? So remember, guys, our job is to make the contacts, let the experts deal with it. Okay, so any questions for Ritu so far? Any more questions? Okay, Ritu?
All right, so the last slide, I believe, is just over all different type of loans that I talked about during my down payment assistance for Empower. CalHFA has a zero down option. So there are loan options under the CalHFA loans down payment assistance, and these are for all over California. They are not based on county, they are for California down payment assistance. They do offer first and second loan. And again, all of this, you have to be an approved lender with CalHFA or Santa Clara County or with Alameda County to offer these programs. So we are approved lenders with them. As such, when your borrower is trying to qualify for one and they don't, it's not a dead end. There are other options we can look into. Hey, you didn't have 3% down payment, or your 120% AMI based on household is too high. Well, CalHFA's median income is and the good thing about CalHFA is that their income limits are more lenient. They go over 200-some thousand for most of these counties, Santa Clara, Alameda, and they do not go by household income. They go by the borrower's income. So if the household income, let's say the borrower and spouse are making 400,000, but the borrower is making only 190,000, they can qualify under these zero down CalHFA programs. So that's again something that we as a lender can pre-screen them, see which program they may qualify or how many of these programs they can qualify for. We have loans with the down payment assistance for first-time homebuyer in the counties where the 3% is required, like the Empower program and the HELP program. There's again programs that are renovation loans for first-time homebuyers with as little as 5% down. If a buyer has enough funds of 5% down and is looking to buy a fixer-upper, they can buy that property. And that's another class, another time, but it's a great program for those people who don't have the funds to buy a full new build or a ready to move in home, but with 5% can buy a home and get the upgrades done from the lender's funds. So that's a renovation loan for a first-time home buyer, and these are government loans. So it's not that it's anyone, private investors or anything. It's a first-time home buyer government loan. And again, that's where our benefit to your client comes in, that being a broker, we have all these different programs under one umbrella, and they don't have to go to multiple institutions to get qualified in the different programs.
So one question, Ritu, on this, is there any different rate of interest for those programs?
Every program has a different rate of interest. It depends upon what the credit, what the down payment, what's the type of property. Rates are not one size fits all. However, the good thing about CalHFA Zero Down is that a person who's putting zero down to buy a condo, let's say in San Jose, and this is the example of our actual loan I did earlier this year. They did zero down for a condo purchase, builder built 700,000 loan purchase price, and the rate was 6.25. That rate was 8% if you were doing 5% down on a conventional regular loans earlier this year. And this one with the condo purchase, because condos are generally considered higher risk, it was at 6.25. So these programs not only assist buyers with down payment, but they have certain time and certain loan options, lower rate as well for buyers to qualify under. The beauty about the Empower program and the CalHFA is the CalHFA actually zero down goes over the two loans. The second loan is zero interest again. Under Empower, the second loan is, like I mentioned, zero interest. 50% of that loan is at zero interest, which means it's not added to the borrower's payment to qualify them. So people who are having a higher debt, because now they're getting qualified at 70% of the loan amount instead of 100% or 90% or 95% of it, can qualify for a higher loan amount based on their incomes using these programs. So that's where it helps the first-time home buyer, not just with assistance, but also with the DTI, the debt to income ratios.
Okay, so that was a lot of information, okay, even for me. So that's why, guys, we need to send the questions to the expert, right? Basically, hey, let's talk to my loan officer and let's look at the financing options to see what is the best loan program for you. Now, remember, whenever we're working with a buyer, any buyer, first-time buyer, move-up buyer, investor, there are what I call the 4 C's, okay? 4 C's, remember this, 4 C's. There's the credit, right? Affects the loan, right? There's the capital, the down payment makes, okay? So that's 2 C's, right? Credit, capital, right? And then capacity. This is the income, right? Income makes a difference on what you qualify for, okay? And then of course, number 4 is the collateral, which is the property, okay? So Ritu mentioned that, right? Depends on the property, may affect the type of loan. Credit, capacity, capital, aka down payment, and then collateral, aka property. So remember the 4 C's, okay? So today at 12 o'clock for our market pulse, I'm gonna ask you, what are those 4 C's? Pop quiz, right? So I know that 12 of you, 11 of you should know the answer, right, Blaze? Divya, right? So you guys better get those 4 C's. So remember, those 4 C's are very critical, right? Some people may not be ready for credit, so talk to Ritu. There's credit repair programs. Now we got the down payment. Income-wise, maybe Ritu has to suggest, do you have any cosigner you can add to the loan to help you qualify? Now remember, there's the 120, 140 limits for the different programs. So again, it's not our job to know these limits. unless you have some sort of cheat sheet that you can get from Ritu. Bottom line is refer the question. Let Ritu do her job so you can do your job to find the house, right? That's why with any buyer, the number one thing you really need to figure out is financial capability. That is the number one thing that you need to figure out. What is their financial capability? You know, even if they have cash, that's still, we need to figure out how much cash do they have, right? If they want to pay cash. So financial capability to buy a property is the number one reason that we need to find out with any buyer, okay? So again, tomorrow we're going to talk about investors at 10 o'clock. As you know, Ritu can help us with the different investors. Like for instance, I just met a client yesterday. He wants to do 12 units, right? Haven't done 12 units recently. So now I got referred to a loan officer that'll do commercial type of loans, right? Because 1 to 4 units is a residential loan. Anything after 4 units is going to need to be a commercial loan, okay? And Ritu can help you with that too, right? Again, if your buyer is moving out of state, Ritu can help your client also with that, right, Ritu? You guys are
Yes.
native right now,
We
right?
do loans in Texas and Florida as well.
Okay, so again, you know, whenever there's financing questions, refer it to your loan officer, all right? So any other questions for Ritu or regarding working with buyers, first-time buyers, or what have you? Anything else? Ritu, you want to close it up? And then,
Yes, so one other last thing is that I've had people tell me that, okay, they're referring their buyer over, but they're sending them over to the Santa Clara County site to look for those programs. I do recommend have them talk to a loan officer or us first, and we do the pre-screening because one of my buyers or one of my referring agents buyers went to the county and was told they don't do visa programs. And so they stopped looking for a home because they were on a visa, H-1B visa. Now, like I mentioned, Empower is one of the programs we have. Yes, Empower will not fund loan or will not provide this assistance to H-1B visa holders, only green card holders or citizens, but not all programs and not all financing options. So instead of referring them to the site directly, have them talk to a lender who can pre-screen, pre-approve them, and then help them get approved for the down payment second loan with the lender we know that they will qualify with, because we have those internal contacts to run scenarios and situations case by case with such lenders. So you don't have to end up losing a buyer just because they went directly and couldn't find the answers they were looking for.
right? Always go to the expert. Okay, any other questions, last minute questions for Ritu? Oh, my final question, Ritu, what was the stat? What's the percentage of first-time buyers out there right now on doing loans?
So right now we are seeing more than 80% of first-time home buyers, and that's again just at our office. We do a lot of first-time home buyers. We have seen a lot of first-time home buyers buy now more in Central Valley compared to here. But what I'm also seeing is first-time home buyers looking for condos and such in Santa Clara County, Alameda County, and I've seen an increase in buyers in Concord and Pleasant Hill, in Martinez and Antioch as areas where they qualify under those programs with zero down.
Okay, so again, you know, price range does drive our market, right? We have some markets that, you know, are way above the program qualifications, right? So it's like, you know, the HELP program is 800,000. You know, what can you find 800,000 in East Palo Alto, Menlo Park, Santa Clara County? Not too much, right? Unless you're looking at a condo or townhouse, right? But again, understand this, right? It's our job to see what the buyer's looking for, have Ritu do the financing so you see what the options are. And then once we have the options, now we can start shopping, right? And sometimes it's consulting the client and say, hey, you know, have you thought about this area, that area? And that's where you need to understand market, you know, market pricing, right? So, anything else before we wrap up?
One question.
So Greg,
Okay, Divya, then Blaze.
go ahead.
So suppose it's like a couple who's in the family way. So are they considered like a 3-person household or a 2-person household?
2-person household.
Okay, thank you.
Okay, Divya or Blaze? Okay, Blaze.
Yeah. So involving somebody who is single, they can still qualify for these types of programs, even though they're not in a collective household where they can gather up all of their income. They have to, or
So a person who's single and their tax returns and all show single and they're not living with their parents, then it's a one-person household. But if they are living with their parents, then again, we have to qualify and pre-screen to make sure that the income from the parents cannot be used or applied towards this program.
got
Okay.
it.
All right, so one last objection that we usually get with these equity share program, it's like, why do we have to share our equity, right? Well, the reason why you're sharing that 20% equity is so you can get the 80% equity. Without that assistance, you're not going to be able to buy. Does that make sense? Right?
Yes.
Because some people give that objection, like, hey, why do I have to give the county, 20% of the equity? They're not doing anything, right? Well, basically, they're loaning you the money so you can buy the house, so you can get the 80%. It's like this, right? When people tell us, why do you charge 6%, Mr. Seller, or to sellers, right? Sellers tells us, it's because so that way we can get you the 94%, right? Our fee is very small, 6% or whatever that percentage is, right? So just remember, people are going to have objections. Our job is to make them see the light, see the benefit. If people don't want to share in the equity, then they're just gonna, find some other solutions to get that money somewhere else, right? Maybe it's they have a rich uncle, rich, grandparent, I don't know. But bottom line is, if people want help, there are programs like this that we have access to help clients. All right. So last minute
And
question.
one more thing
One
on that.
Yeah.
One more thing on that is that if they are not buying but renting, how much of that rent are they paying monthly? If they're paying 2,000, 2,500, for example, they are anyways paying 25,000 in 10 months to the landlord. With having their own home and having to return the equity when they refinance, it's also a better option than just keep renting and paying it to the landlord. So the math sometimes makes sense.
Right? And that's what we have to do. Okay, Mike and then Divya. Mike? What happened to Mike? All right, Divya then. I can't hear you, Mike, so.
Hey,
Go ahead.
Ritu, one quick
Yeah.
question. So, you told us like there is limit to offer a gift. So how much limit, for particular loan program, or it's like every loan program has the same gift limit option?
No, it's different loans, different programs, and different gift amounts. Empower and Help are the ones that allow only 1.5% of the 3% they require from the borrowers as gift monies, and immediate family only.
Okay. Got it.
Okay.
Thank
One
you.
quick question, can I ask?
Sure, Maria.
So when they sell, does it have to be like a city appointed realtor or they can have their own realtor?
Yeah, the program doesn't control the realtors. They can choose their own.
Okay, thank you.
All right. Anything else, Mike? I don't know if you can unmute, but otherwise, you guys have Ritu's information. It's on the screen. I'll send out this recording probably by tomorrow. Again, other than that, we'll see you guys today at 12 o'clock for the Market Pulse. Get ready for the pop quiz. And of course, if you have more contract questions, we'll be on Zoom at 2 o'clock today. So other than that, thank you, Ritu, for your time and information. Again, guys, go to the experts and get those buyers into an appointment with Ritu on Zoom or on the phone or live in the office, right? So anything else,
Thank you.
everybody? We're good? All right, other than that, we'll see you guys at 12 o'clock today, if not at 2 o'clock. All right, bye everybody. Thank you, Ritu.
Thank you.
Thank you, guys.